Welcome, everybody. Thanks for being here. I am going to do a little bit of, just so everybody can sort of put a face to a name, since we were forced to take our name tags off. Can I just start at the end and tell me, Katie, a little bit about what you do and what your relation is to CFS?
Sure. Katie Ray, I run something called the Engine Ventures, and we do very early investment into what we call tough tech companies. So things solving the world's biggest problems that involve atoms, probably and software, but we work in climate, we work in health, and we work in advanced systems. And I have the pleasure of serving on Commonwealth Fusion's board and being around. We lived together for a while in the same space. That was a lot of fun. I'm laughing, Brandon's in the front row. And so I'm an early stage investor, usually sit on the board for a long time and try to help these companies grow and cross what Tyson, who's sitting in here, and a bunch of other people dubbed the second valley of death, which is like the first is like, you got to get out of the lab, you got to get the company rolling, and then the second is you got to get to scale so we have the impact that we want and the capital return that we need. So that's what I do. It's a lot of fun, and I get to work with all these amazing people. And I just want to shout out one thing. Clay was supposed to show up in a kilt. He did not.
We're supposed to be matching kilts. So nobody showed up in a kilt. I'm not taking the blame for this.
It feels like neither of you took the bait is what
No,
actually
no,
happened.
we didn't
Exactly.
take the bait.
Neither of you fell for that. Clay, please tell us about your involvement here.
Yeah, hi everybody. My name is Clay Dumas. I'm a founding partner of Lowercarbon Capital, which, the name kind of gives it away. We're investing in technology to bring down CO2 in the atmosphere. We're about a $2 billion fund in total AUM, but we have a dedicated pool of capital just for fusion startups. And we can talk more about this, but that's actually Bob's fault. CFS is the first fusion company we backed back in 2019. Is that around when that happened? 2019, something like that. And 2018 maybe. And now we have a growing fusion portfolio of 8 companies. Thanks for having me here today.
Awesome. Allie, what do you do at CFS?
Hi, my name is Allie. I'm Senior Vice President of Corporate Development, so I focus on capital formation, strategic partnerships, and some pieces of corporate strategy. I have a unique history with CFS, actually. I've been here full-time nearly 4 years, but I've been around since the origin of the company, first as an investor working with Katie. But ultimately, the more I learned about Fusion and about CFS, I decided to vote not just with capital, but with my feet. So now I'm here.
Great. Charles.
Hi everyone, Charles Boakye. I'm probably the only investor up here who isn't invested in CFS. So I work over at Jeffries.
You will be.
It's a matter of time.
No pressure, Charles.
Yeah, exactly. I work at Jeffries full service investment bank. So in addition to typical investment banking activities, raising capital, IPOs, M&A, corporate advisory, we also obviously do a lot of sell-side research. I lead our energy transition research for the Americas. And so that is basically advising, speaking to institutional investors around how they should think about the energy transition, but importantly, how they should allocate capital. So think of everyone from sort of your hedge funds to pension funds, all the way through to infrastructure investors, project developers, et cetera, et cetera.
I'm going to go back down the other way. Charles, as the person who did not, are you investing in Fusion, and what would you tell people about investing in that space specifically?
Yeah, so I love the VC crowd.
This is going to be the most expensive panel Charles has ever been part of.
I cannot wait for this answer.
He's going to have to write a big check after this.
So look, a lot of the folks that we speak to and engage with on a daily basis aren't yet invested in Fusion. And the story we've been telling them is, yes, one of the potential, yes, one of the market sizing, but also it's getting line of sight into the adjacent technologies that Fusion may bring. I think we'll touch on things like risks and tech risk and economic risk, which for my crowd is very difficult for them to get around where Fusion is currently. But many of them are invested in other sectors like biotech. And many of them do it not because they understand the biotech side or because they've been able to retire, for instance, tech risk. It's because they want a line of sight and visibility into adjacent use cases. And so one example at the moment is HTS wiring in sort of the overall energy transition. That has become sort of a huge area of focus and investment for a lot of the folks we speak to, And that is something that has almost come directly from sort of the fusion sector. And so other sort of tangential use cases is one way which we are selling the story to our crowd, in addition to the climate story, the energy density story, et cetera, et cetera.
But you are selling that story to your crowd.
Wouldn't dare of not doing so.
Not in this room anyway.
No.
So for the three of you who did invest in CFS, why, and then Ali, you just went all in, which I will say you are not the first investor I've heard say that about CFS specifically. I don't know if they ended up with the company, but apparently it's a tempting proposition. What sold you? Like, what made you choose CFS and fusion broadly, because it is a big swing with, of course, a lot of risk related? This is, I mean, I'll keep going down, but then,
Are you going to Ali?
Yeah, Ali, you start. What made you, do both, right? What made you invest and then go, I'm all in?
I mean, I think everyone here is already aligned to this, but like the energy transition is essentially the largest mobilization of capital ever. And I think the primary use for fusion is the electricity market. The math that we do is like there's over 30,000 power plants in the world, but only 3,400 of them roughly produce 85% of the world's electricity. And most of them are fossil. And if you assume like a pretty conservative cost of electricity, like $80 a megawatt hour, that roughly pencils out to like nearly $2 trillion in revenue a year. And on top of that, fusion is like a fundamental building block of the entire energy transition. Ultimately, it's a form of high quality process heat. So you can use it to decarbonize pretty much every sector of the economy. And so, salt water and air plus a commercial power plant, essentially you can entirely decarbonize, power, fuel every industrial sector of the modern economy. And I think for CFS, the thing that really stuck out to me, and I think also one of the things that's like most fun about working here, is we're building an industry at the same time as a company. And I think you probably got a sense for this from Bob, but a lot of what CFS did, I have the benefit of having been on the outside and the inside, is like very intentional about thinking about all the pieces that need to move in concert with one another so that the world is ready for fusion as we progress from a technology standpoint.
Clay, you set up a whole pool of capital for this.
Yeah.
Well, I feel silly now because when we invested, Bob said there was no risk, everything was solved. And it was just a matter of time.
That's
when
so
they
funny,
were
that's
making
what
Bitcoin.
I always say too.
No, we took the first meeting, I say we, so my partner Chris Sack and I took the first meeting with Bob, and we really didn't know very much about fusion. To be honest, it was for us sort of a fishing expedition. We came out of that meeting ready to commit to that first round of capital, but we also came out with some homework from Bob. I think he helped us to understand in that first meeting some of the, not all of, but some of the very important trends that were enabling a commercial fusion company today in a way that would not have been possible 10, 20, or 30 years ago. And some of the underlying technology shifts that were not just for fusion, but they were driving some of the other industries that we were investing in. Big advances in material science, obviously, are very meaningful for a company like CFS, but they weren't just limited to their application in a tokamak reactor. Huge advances in computation, which made it possible to run simulations that we couldn't write down on paper a couple decades before. And so for us, it was a recognition that there was something here and we should go find out more. It was on Bob's recommendation. We went and met with all the other teams that were participating in, at that point, ARPA's Alpha program, which was an early program for commercializing and spinning out fusion technologies, mostly from university settings, but some from national labs. And we heard a really consistent story across the board. And these were not necessarily very polished pitches. Weren't coordinating behind the scenes to tell us this story. And I think it led to our second and then our third investment in the space. And the progress that we saw unfolding in a lot of those companies convinced us of something that's really important to believe if you're going to invest in fusion, which is that this is no longer a matter of if, it's when. And when is much sooner than most of the world outside of this room believes. Reasonable people can disagree about it, obviously, and they do, and they will, but we came to believe that very firmly. And that was the the jumping off point for launching a dedicated pool of capital to invest in fusion companies. The idea was to build a small but concentrated portfolio of great teams that were building different types of reactor architectures, that we would take risks across a body of different companies, some that might not even be fully verticalized fusion companies, but building critical pieces of the supply chain. And when we did, the very first investment that we made was in CFS.
When you say a pool of capital for fusion companies, is it specifically companies that are developing fusion energy, or are you, like Charles, taking that kind of portfolio approach to helping catalyze an ecosystem?
So far, we've only invested in fully verticalized fusion companies, but I think in the years ahead, we will see different, potentially very critical pieces of the value chain emerge, and that will present, I think, compelling cases for venture investors. There are already critical pieces of the value chain that I think people should be investing in now, whether that's for commercializing fusion or for national security reasons, or because you have a different sort of return profile than a venture investor, and we can talk about some of those. I think those are out there, but for us, so far, the bet has been on fully verticalized fusion companies.
Yeah. Katie, how about you? What sold you here?
Okay, so I'll take lots of good points, but let me just simplify this, because I've probably met with all of the fusion companies that have raised capital, and I've only invested in one. That doesn't mean anybody else is bad or not, but let's just be very, very freaking real here. Technology's cute, and who cares? It is the team that is going to make the company. And there's no better team in the world. I'm sorry, hands down. You have a CEO and full team that can deal with regulatory, can deal with science risk, manufacturing, capital, marketing, just all the way around. You can't win without a team like that. And I did a fusion panel yesterday, and I was like, is this a joke here? Like, there's one company that can do it, and they're gonna get this right. And I sound like but I worked with Elon in his first company. I know what like a crazy maniac, amazing CEO looks like. I tell this to people all the time, and Bob, I hope he frickin' blushes. But like, he's 10 times better, maybe 100. And that's a pretty big statement, but it's freaking true, okay? And they're gonna go slay everything they have to slay, which are many dragons. But I would put this team up against anyone. And by the way, I wrote the first check so they could move out of MIT and form the company. Dave Gamble, who's standing back there, if you don't know him, he is the lawyer that negotiated the deal with MIT, one of the most unbelievable deals you will ever see.
Literally award-winning.
Award-winning deal. But it wasn't just award-winning. It meant that you had to bring an institution like MIT, who had never done this before, to allow the research to continue and the collaboration and the space, so this could go way faster, way better. That's just one example of many, many things like that CFS has done since then. That was just like the first pebble they threw into the pool of unique deals. And that you're gonna see that trend happen over and over again, because the technology is understood, the pathway to manufacturing and scaled manufacturing is understood, the supply chains are understood, and they are building. Every single time I go to CFS, the team is better, the team is self-critical, they're making the changes they need to do, they're adding more people with expertise, and more investors who get how to bring this to scale. So that's just, is that
You got your checkbook out yet?
I just want to.
Do you have it? Do you have your checkbook back? We could get it. It's backstage.
I
actually want to pick up on this because, for a lot of the folks we speak to, the tech is not what's going to sell them. I think there is now an acceptance in at least the institutional investor community that human capital is sort of a huge driver of outperformance. We did a little bit of work. I think, over the last 20 years, if you would have just invested in the best companies to work for, you would have made 520 bips year on year, 20 years. Better investor than Warren Buffett. You would be, hand over fist. And And so that sort of human capital story is partly what is going to bring the institutional investor community to Fusion, but also specifically to CFS.
And just on that point, it's easy for us to make statements like that because we're investors, and of course we believe some of those things. The point about excellence in leadership and management is manifest in Devens, Massachusetts. I really would recommend, I had the chance to go see it again for the first time in a long time, just a couple months ago. If you haven't been up there, just as a curious human being, please make your way if they'll let you in. It is not just a matter of comparing it against other fusion companies. It is one of the most excellently run companies that I've ever seen up close. And it's really awesome to see. So I say that with all sincerity. Go see it for yourselves.
The thing I was just going to add is like the thing about tough tech is like it's really hard. It's still worth doing, but it's really hard and it's really complex. And it's like Spark has over a 14,000 line item schedule. And the thing about team is like you can't hero something like Spark. It's not like one person that's going to make or break Spark. It's like a highly integrated, complex thing, day in, day out, making sure there's like handover and intense collaboration because it's got to be all in sync. And I think that's the way we think a lot about talent.
Well, I kind of love this because I wanted to ask you the same question that I asked Bob, which is what is the wall that could be hit? And he said talent. He also said there's a list of questions that you should ask to evaluate these companies and whether they're real. And so I feel like we've gotten the talent answer unquestionably. But I do want to know from each of you, when you think about the questions you would like to ask, you should ask as an investor, or you would like to be asked about what you're building, what do you say? Charles, let me start with you too, because you're also interfacing with public equities and it's just a different set of questions.
Yeah, I mean, the tech risk is a question that sort of needs to be tackled and is something that they will obviously always think about. Mm-hmm. But the big question, I think, for the public equity crowd is obviously the economic risk, right? We don't fully understand, and I don't think it's reasonable to expect a proper understanding. You know, what are we talking about in terms of cost? What are we talking about in terms of price? Where are rates going to be in sort of 5, 10, 20 years? What is that energy market of the future going to look like? Is it going to be a predominantly renewables energy market? Is renewables going to be specific to electricity? We don't have a full sense of what that economics looks like at the moment. And so that is kind of the question we are trying to help a lot of folks get over. I mean, there are more question marks than answers, but answering that sort of economic profile of what things will look like in 10, 15, 20 years is probably the biggest thing for our crowd.
Yeah.
But, okay, so I'll just add here, I mean, I love the public markets. They're amazing. But I think what is going to happen here and what we see happening is that the largest private pools of capital are going to write the ticket to the future. Mm-hmm. And in a way that kind of stinks, right? Because the upside of that, you know, we think of the public markets as being broadly accessible. I don't see that happening. Mm-hmm. I think the private markets are going to drive things like Fusion forward. And I talk to large pools of private capital all the time. And they are starting to see the writing on the wall for how the transition happens. It's not like they're going out of oil and gas right now. But they do see that we are going somewhere else than oil and gas over a period of time. And they see the writing on the wall of the possibilities. Yeah. And I just think that's the way it's going to transition. And I think we just all have to get comfortable with that. And it's going to take, if the U.S. wants it to happen here, it's going to take real capital to make sure that happens and collaboration. And we're going to have to get real that, 98 fusion companies aren't going to win. It's going to be 2 to 3 max. Yeah.
Do we think on this panel that there is enough private capital?
I mean, there's like $300 trillion in the world and half of it is private.
Right.
And Bob talked about 10 billion. It's like, what is that? 0.003%.
I'm sure Bob did that math already, but I'm not.
Yeah.
Yeah.
I think there's plenty.
Yeah, so there is. Do we want it to go that way?
More.
No, I mean, look,
Fusion is going to need a lot more money. There's no, that's not a secret to anybody. But I think one thing I can report from across a portfolio of companies and being pretty deeply implicated in this space now over the last five or 6 years is that that's starting to happen. The set of people that were willing to take a risk on a early stage fusion company when Katie bust out her checkbook for the first time was not very big. I mean, it was bigger for CFS and for a lot of other companies, but that's not a big, the X there is not very big. The number of investors participating in fusion rounds today is much broader, just a few years later, and who are leading fusion rounds and sticking their necks out and who see what the future could look like. So we're moving in the right direction. It needs to accelerate. Private investors are going to have to drive the ball forward, but we will also need governments to pitch in. We're going to probably want corporates to pitch in. To a certain extent they have, but there's big balance sheets there, and I think that you can make arguments about kind of hedging for the future for a lot of different industries, but they're going to have to be, especially as we think about financing large projects, there's a lot of expertise and know-how that sits within large private corporations, and we're going to want to get them involved. And over time, I agree with Katie, it's going to come from privates. I think there is a role for public markets in fusion. I think there are going to be a lot of public markets investors who will recognize the inherent risks that exist in any fusion company, even one that's already commercialized, but who will want a piece of the upside.
I'll just add quickly, I think the way public markets is likely to get involved actually isn't via for instance, a BlackRock who invest in public equities, who commits capital to it. It's actually going to be, as Clay says, through the corporates, right? It is going to be the corporates spending capex or through strategic partnerships with companies. And it's going to be investors in, for instance, a utility looking at that capex and deciding this is how I want to get exposure to fusion. And I do think that the corporates are probably the most natural sort of ally for sort of deploying huge ticket sizes because of the know-how, because of the huge balance sheets. But yeah.
I know this is going to, I don't want to jump ahead to the next panel too much, but this is a little bit of a US or at least Western-centric conversation today. Because in China, a lot of the funding is coming directly from the government, and not just for fusion science, but for the commercialization of fusion technologies. And they have a couple of big projects that look a lot like the projects that we have here that have published research on how they made their progress. Surprise, surprise. There is another path that involves a lot more money from governments. And I think one thing that we collectively have to wrap our heads around, not just the people in this room, of course, but the people who are working on fusion generally, is the US invented solar PV, and now all the panels are being made in China. And there are a very small set of people, a lot of them work at CFS, who are working on harnessing the sun for a second time. And if we do not get our act together quickly and on a big scale, we are going to make the same mistake all over again. And so this is, on some level, about galvanizing big public institutions to get their head in the game and focusing on what the opportunity is.
And then maybe just to add on to that, I also think that, when a space gets hot, I mean, just look at AI. You literally could have a company that you pitch to an investor, and it was a terrible idea. And you add the words AI, and you put some scientist on it that looks like, you're a $100 billion company. Right. Like, what? So you're going to see this in fusion as well. I mean, you're already seeing it where it's like, oh, we want to get in at the beginning, so we're going to make a wild bet on something deep science experiment because we want our name on something. And investors do this all the time. It's just like,
well, and then
that
they
is
if people want to start treating fusion like AI, I'm all for it. I think it's good, but
we are also.
But it's also
you don't get
dangerous.
AI without fusion.
We are. It is dangerous, right? We are all familiar with the boom bust problem, and so that's why when I say is there enough private capital? It's sort of like, are there enough dollars? Sure, but is there enough tolerance for timelines?
I think
is there
it's
enough
more creativity.
Yeah.
So in my view, we're in the business of building capex heavy products. But the degree to, how much is CFS capital intensive as a corporate versus how much can we use traditional infrastructure, project finance debt to build those assets? That's the question, is how soon and how quickly can we access that capital? And I mean, I think, Bob touched on this. I think if you've been at Climate Week, there's all these conversations about the first of a kind challenge and valley of death and whatnot, and I'm like tired of that, because I actually think it's an opportunity just as much as a challenge. I think we see it as actually like a missing strategy in the market. There's an opportunity for kind of a new blended asset class that invests in the top co, but invests in the projects, and it's based on the fact that like the context today is different. So the big difference between climate tech 1.0 and today is like, for the first time in history, demand for clean energy outstrips supply, which means that in the future, access to clean power will provide differentiation, and in my mind, market winners. And so those that have access to that clean power will be in a very profitable situation. And I think those who are willing to think a little bit creatively right now to get in kind of a click earlier than they would, where there's this kind of blended way of benefiting, where there's upside not just from building the project, because the returns of the early projects might not be good, but there is value ascribed to the top co by getting those things built and showing that they work and showing that they operate, while also adding in, access to the future transactions. And the downside is protected too, because ultimately, we're building these things on land with interconnection assets. Mm-hmm. And so I think historically, and what we're seeing is that a lot of capital is separated into very discrete buckets, and they're not willing to speak to one another or work across the aisle. But I think if there's a group that does that, they'll be in a position of strength 10 years from now.
Can I say one more thing about AI? And I think we should save, there's going to be a lot of good...
Well, I want to say that, and then I want each of you to weigh in on this idea of AI as a driver of frankly, like more energy investment.
Oh, great. Well, that's what I was about to say. So.
Super.
No, I mean, listen, we can tell a bunch of jokes at the happy hour afterwards about the crazy AI rounds that are happening or have happened over the last couple of years. But the reality is that AI is a gift for Fusion and for a lot of other clean energy companies. There was a really big and exciting story to tell about how Fusion and a company like CFS could supply 5, 10, 20% of the world's primary energy production and become the most valuable company in the history of capitalism. And I think that vision is really exciting and it's very alive, but we're jumping past a lot of steps that we didn't totally have control of. And we had to have some confidence, and some investors very early on took a big leap of faith that the world would eventually come around to the real benefits of what Fusion could offer. But when I say that AI is a gift, it's in the same way that AI is right today is a gift for fission. Power plant, 3 Mile Island was not going to come back on because out of the goodness of somebody's heart. It was coming on because there's an intense interest and demand for clean electrons. And it provides a very it gives us a very well-funded customer who wants to see this technology come online and to accelerate it. And so these things are deeply intertwined. And I think historically, if you just look back at the history of fusion and compute, they've been connected in all sorts of kind of historical ironies, but in very direct ways too. And I think that the future of fusion is deeply linked with the acceleration of AI, for better or for worse. I don't know if that means that we're all going to get eaten by the machines because of this, but Bob, don't let us get eaten by machines.
But it also drives people
Don't make us the batteries. I've seen that one.
I totally agree with Clay that it is accelerating the transition, but it also brings more than the hyperscalers into the game, because they know the hyperscalers are going to want these power plants.
Yeah.
So if you want one too, you better get into the game. And I think that's the most exciting thing, is that it is accelerating everyone's thinking about what is the grid we want of the future, how do we want to get power, how is it clean, what are the possibilities, and everyone has to think through that strategy, because AI has just busted onto the scene. And utilities, who are like very laggard in many ways and can be very laggard, have to think about it as well. And the government has to think about it, because are the people going to get energy, or are the hyperscalers going to get energy? Like, the pitchforks could come. So you got to think through all those scenarios and what's fairness and how does this work. So it's accelerating all of that thinking, which I find very exciting.
That's a perfect segue to the panel that's going to talk about all of those exact issues, the government panel. But I want to thank our investors, and you'll be able to bum rush them at the happy hour after.
Awesome.